Let's go in. Puppy spanking. All the way, baby. Nothing will get you through the night, through the day, through life, except the mighty disco. No. And you love me. Bang! Oh, how you guys doing? I hope you're doing wonderful. I hope you're doing fine. And this is the put to call, the equity put to call, as I stated last time, that we had a negative divergence, and we might go down. And this what happened. To recap my views about the put to call, as I said before, any up move in the put to call, usually you have a positive divergence, and this what happened between the price action and the stochastic. It happened twice, back to back, since November 9th, and I stated that MACD crossover is really important in this chart, and it always produces an up move in a put to call, which means a down move to the market. And I said last time, the difference now is the MACD's above the zero line, which indicates more volatility to come. And you could pause and look at what I did in this chart. Quite sure. I love it. Good deal. Okay. And this is the disco signal I talked about before. I stated, if you think about the distance between the two moving averages, the 20 and the 50, if it gets closer, usually a major pullback happens in the market. And I argued for every time except this time. Every time you have a bullish crossover between the 20 moving average and the 50 moving average, in the put to call, a major retracement takes place. You could look it up yourself. I called it a disco signal. So enjoy it. Good deal. So let's talk about the mighty king, the mighty dollar, and what happened. What happened yesterday is a breakdown, a fake breakdown that really ended with a beautiful hammer that took a lot of bears. You know, made new lower low than Thursday, which was supposedly a bear trap, yet it was not confirmed. Usually the bullish engulfing needs confirmation the next day. So this was not confirmed. And now you have a hammer that needs to be confirmed too. So this is for the dollar in the daily time frame. You have this beautiful hammer that found buyers at the end of the lower end of the Bollinger Band, which means reversion to 1935. Sometimes it means going all the way to the upper end of the Bollinger Band to 91.21. So what's good about the dollar in the daily time frame, as you see the bullish divergence, which I really believe in, and I don't want to argue with anybody against it. So that bullish divergence started in December, even in stochastic. And this beautiful RSI that is really, very reliable here. And it's in 35. Okay. And now you have a bullish crossover in the stochastic above 20, which means momentum to the upside most of the times. So if you go back to the chart, you see price expansion to the upside every time you stay very long in the oversold. Then you go up right here. So you had almost 1.5% in 2 days, which is really huge in the currency market. So an expansion to the upside is expected very soon because of that, historically, based in history. So this is the daily time frame. Let's talk about the weekly time frame. So the weekly time frame, as I tweeted to 3 people that are following me, Kareem and Abdul Jabbar and Abu Baba at Twitter. This is almost an identical price structure of today's USD DXY in the weekly time frame, and what it was in late 2017, early 2018. We had the duration of the bullish divergence. It's exactly the same as I put it here. Let me take it across. So the duration is almost the same, which is really interesting. The bullish divergence is not exactly the same, but there is a bullish divergence with the exact duration. The price structure, the price behavior is very close. Also, the rejection so far from the bear trap is very close to the rejection here, with a form of hammer in the weekly time frame. So I really would not bet against the dollar right now, based on the daily and the weekly time frame, the bullishness. Okay, let's go to the Dow Industrial. Good deal. So what's going on with the Dow Industrial? We start with a bearish crossover in the MACD that took place in December. This is one of my rules. I will never trade against the direction of the crossover. If it's bearish, I don't like shorting, but if it's bearish, I will not go long. Okay, so this is the first problem. Second problem, a bearish wedge. Still in the bearish wedge so far. Third problem, a bearish divergence between the price action and stochastic is very close. Started in November. Beautiful. What happened in the past? Yeah, you can look it up yourself too. So I'm arguing bearish divergence between the stochastic and price action, and bearish crossover in the MACD always results in retracements. You can look it up. It's almost 100% of the time, the one I looked at. Okay, so you can look it up. So this is by itself is a scary thing for me. Okay, so good deal. So what's going on here? You had a rejection from lower price, but these to me are cracks. In uptrends, you don't like the cracks. You don't want the cracks. In addition to that, let me put the chart with 3 years so you can see how truthful this thing is. You can pause and look. So I don't have issues. I really don't have issues. So you could look it up. You could see it. So it's not because I do have issues, although I do. And another thing, usually you want riskier assets or riskier indices to perform better in downtrends. Yet the IWM performed worse as far as the price actions. I think so. Let me see. Let me check. I don't want to look like a liar. So okay, I thought it performed worse. Well, it did. So usually you want the IWM whatever to outperform the big blue chips. And anybody, this is a bearish structure. Is not, and I could prove it throughout the years. So please, if you like, push the like button. If this is your first time, subscribe, and share the love, please. Nothing is forever except disco. It's forever.